InterGlobe Aviation's numbers, the profit missed analyst estimates by a wide margin. Higher fuel expenses, lower airfares, foreign exchange losses all played havoc with the numbers. Soumeet Sarkar is standing by with the fine print. Soumeet, good morning. It seems like Indigo refuses to stay out of news.
Well, yes, they have refused again. Now, if you see the fourth quarter numbers, it was a very weak set of numbers and they were way below the analyst estimates for Indigo. Now, though the revenue increased 20% to close to 5,800 crore rupees, the company's EBITDA, that is earnings before interest, tax, depreciation and amortization and rental costs, declined by around 16% compared to last year. And this is the biggest ever decline that the company has seen in its EBITDA since listing. Now, the company's margin, that is the EBITDA margins, that came in at around 19.4% in the fourth quarter of financial year 2018. And this is the lowest ever margin that the company has reported since listing. Now the net profit, now that saw a big fall of around 73%. Now this is the biggest fall that the company has seen in its net profit compared to last year since listing. Now three reasons why that led to such a weak numbers in the fourth quarter of financial year 2018. First was the weaker yields, second was higher fuel prices, and third was the foreign exchange loss. Now if you see the yields, that is that measures the average fare that the company gets per passenger per kilometer. Now Indigo reported a yield of close to 3.3 rupees per kilometer in the fourth quarter of financial year 2018, and this is the lowest ever yield that the company has reported since listing. Now this yield had fallen because of the competition in the industry, and company had to lower its airfares to match the prices that the competitors were offering, and competitors were offering prices at a discount to customers. So that's the reason the yield has fallen in the fourth quarter. Now if you see, the fuel prices on an average in this quarter were higher by around 11.5% compared to last year, and in this chart you can clearly see how higher fuel cost has impacted the company's revenue, company's cost structure. Now the fuel cost as a percentage of company's revenue, revenue has increased to 40% in the fourth quarter of financial year 2018, and this is the highest ever level that the company has seen since listing. Now, and this is also 4 percentage points higher compared to last year where it was 36%, and compared to last quarter, if you see where the fuel prices were higher, it is higher by around 8 percentage points. Thirdly, it was the foreign exchange loss that impacted company's financial. Now, in the fourth quarter of financial year 2018, the company reported a foreign exchange loss of close to 93 crore rupees because of adverse rupee movement, as against a foreign exchange gain of 160 crore rupees. Now, as most of the costs for an airline company are dollar denominated, this foreign exchange loss, as against a foreign exchange gain, income, had a net of impact of close to 250 crore rupees on Indigo when it comes to the bottom line.
Okay, Soumeet, so the focus of the management too seems to be cost control. I mean, Rahul Bhatia apparently made it amply clear in that conversation that you had with Menka as well, and I guess some bits of it came out in the analyst call too.
Yeah, mainly it's cost control because of the yields are falling and also the fuel prices are increasing. So cost control is what is going to help them going forward. Along with that, they also said that they are working with Pratt & Whitney to solve the engine issues that they faced in the fourth quarter, and they expect these engine issues to solve as soon as possible. They also said that they have also given a guidance, forward guidance, that they're looking in the financial year 2018. Now they expect the available seat kilometer to increase by around 25%. That is the capacity growth that they are eyeing for financial year 2019 compared to last year. Now the management also said that their cost structure will come down going forward as they start purchasing more aircrafts using their free cash flow. Now in financial year 2018 they only bought ATRs using their free cash flow, but in financial year 2019 they'll start buying the bigger aircrafts, that is the Airbus, using their free cash flow in the financial year 2019. Lastly, they also said that they are planning their long haul international routes without Air India now.
Okay, Soumeet, now you track this space closely. Some of these issues that Indigo has faced, particularly fuel, etc., would weigh in on the other aviation stocks as well. If Indigo, which arguably has a very tight grip on cost control, faced such issues that the margins were the lowest since listing, it wouldn't be premature to think that the other companies would face some serious pressure on their profitability this time.
Waiting out to see their results now, because the company has clearly said that the pricing pressure was seen throughout the industry. So that means the other two listed entities, that is SpiceJet and Jet Airways, must have also seen this pricing pressure, and their cost structure is higher when compared to Indigo. So we'll have to see how their results come out, and they might come out weak, because if there is pricing pressure in the industry with higher cost then the net profit will also weigh some, will have some bearing of this thing.
Any kind of recent sensitivity analysis, Soumeet, that you've done as to amongst the three players, which has got the highest sensitivity to crude oil prices uptick? And was that the principal reason for InterGlobe? I know there were foreign exchange losses as well that weighed in, but was fuel the principal reason?
Well, yes, fuel prices was a principal reason, and mainly it was more important because the airfares were falling and the fuel was rising. So that had a double impact on the company. And if you see for SpiceJet and Jet Airways, SpiceJet has a higher fuel cost when compared to Jet Airways. So the impact could be higher for SpiceJet if it is an industry pricing pressure that we have seen.